Voice, Bitcoin, XRP. Brace for Kevin Warsh's first FOMC, Welcome back to XRP Economic Radar, your trusted source for the latest developments in crypto, financial markets, and global economic news. Today, all eyes are locked on one of the most important events for investors this month as Bitcoin, XRP, and the broader cryptocurrency market prepare for the first Federal Open Market Committee meeting under newly appointed Federal Reserve Chair Kevin Warsh. This is more than just another Fed announcement. Markets across the world are watching closely because this meeting could provide the first major clues about the future direction of monetary policy under Warsh's leadership. Traders, institutions, and everyday investors are all trying to understand whether the new Fed chair will maintain the path established by previous leadership or introduce a different approach that could reshape expectations for interest rates, inflation, and economic growth. With cryptocurrencies already showing signs of nervousness ahead of the decision, the stage is set for a potentially market-moving day that could influence Bitcoin, XRP, and every major risk asset in the weeks ahead. The Federal Reserve is widely expected to leave interest rates unchanged, and according to market pricing from the CME FedWatch data, investors are assigning roughly a 99% probability that rates will remain at current levels. Normally, such a strong consensus would suggest a quiet market reaction. However, this particular meeting carries unusual significance because it marks Kevin Warsh's first appearance as Fed chair during an FOMC decision. Investors are not just interested in the rate decision itself, they are focused on every word that accompanies the announcement. Markets understand that future expectations often matter more than present actions. Even if rates remain unchanged today, any hint regarding future hikes, inflation concerns, or policy reforms could trigger major movements across stocks, bonds, currencies, and crypto assets. That is why traders are approaching this event with extreme caution, reducing risk exposure and waiting for more clarity before making aggressive bets. The official policy decision is scheduled for release at 2 p.m. Eastern Time, followed by Kevin Warsh's first post-meeting press conference 30 minutes later. While the rate announcement will certainly attract headlines, many analysts believe the press conference could be the real market-moving event. Warsh has already indicated that he wants to review how the Federal Reserve communicates with the public and financial markets. That means investors will be listening closely not only to what he says, but also to how he says it. Every comment regarding inflation, employment, growth prospects, or future policy direction could influence expectations for months ahead. The financial world understands that first impressions matter, and this will be the first opportunity for markets to evaluate Warsh's communication style, leadership priorities, and overall vision for the Federal Reserve. One of the most notable voices weighing in ahead of the meeting is economist Mohamed El-Erian, who described today as a historic moment for the Federal Reserve. According to El-Erian, the real story is not whether rates remain unchanged. Instead, the key issue is how the Fed evaluates risks facing its dual mandate of maintaining price stability while supporting maximum employment. He also pointed to the possibility that Warsh could begin implementing changes to the Fed's operating framework, particularly its communication strategy. These comments have amplified interest in the meeting because investors know that shifts in communication often signal deeper policy changes ahead. Markets are increasingly wondering whether the new chair will place greater emphasis on inflation control, labor market conditions, or broader structural reforms that could redefine how monetary policy is communicated in the future. As investors wait for answers, cryptocurrency markets have already started showing signs of caution. Bitcoin experienced a decline over the last 24 hours and has been trading around the mid-$60,000 range, as traders reduce exposure ahead of the announcement. XRP has also faced selling pressure, slipping as investors move into a wait-and-see mode. Ethereum and Solana have joined the broader pullback, reflecting widespread uncertainty across digital asset markets. This cautious behavior is common ahead of major Federal Reserve events because crypto assets tend to react strongly to changes in liquidity conditions and investor risk appetite. Many traders prefer to reduce leverage and protect profits before potentially market-moving announcements rather than risk being caught on the wrong side of sudden volatility. The broader cryptocurrency market has also weakened as investors digest growing uncertainty surrounding monetary policy. Total crypto market capitalization has slipped, reflecting a broader shift toward defensive positioning. While crypto enthusiasts often focus on blockchain developments, adoption trends, and technological innovation, macroeconomic forces remain a powerful influence on digital asset prices. Federal Reserve decisions directly impact liquidity conditions throughout the financial system. When money becomes cheaper and easier to access, investors often seek higher return opportunities, including cryptocurrencies. When financial conditions tighten, risk assets frequently struggle. This relationship has become increasingly important as institutional participation in crypto continues to grow and digital assets become more integrated into global financial markets. Understanding why Federal Reserve decisions affect Bitcoin and XRP requires looking at the broader financial ecosystem. Interest rates effectively determine the cost of money throughout the economy. When rates are low, borrowing becomes cheaper, economic activity often increases, and investors search for higher returns in riskier assets. This environment tends to support cryptocurrencies because abundant liquidity encourages speculation and investment. Lower rates can also weaken the US dollar, strengthening Bitcoin's appeal as an alternative store of value. Many crypto supporters view Bitcoin as a hedge against currency debasement, making accommodative monetary policy particularly attractive for the digital asset sector. As a result, even subtle shifts in Fed expectations can produce outsized reactions in crypto markets. The opposite dynamic occurs when the Federal Reserve adopts a more hawkish stance. Higher interest rates increase returns on traditionally safe investments such as government bonds and money market instruments. This can reduce the attractiveness of non-yielding assets like Bitcoin and other cryptocurrencies. Tightening financial conditions also remove liquidity from markets, making investors more selective and risk-averse. For this reason, crypto traders are carefully analyzing every signal coming from the Fed. Even if rates remain unchanged today, indications that future hikes are possible could weigh heavily on sentiment. Markets are forward-looking, and expectations often drive prices long before actual policy changes occur. Adding another layer of complexity is the recent strength of the US dollar. Currency markets have been adjusting to growing expectations that the Federal Reserve may need to maintain a tougher stance on inflation. The dollar has climbed to levels not seen in more than 2 months as investors increase bets on future tightening. A stronger dollar often creates headwinds for cryptocurrencies because it can reduce demand for alternative assets and increase the attractiveness of dollar-denominated investments. Bitcoin and XRP investors are therefore monitoring not only the Fed decision itself, but also movements in foreign exchange markets, which could provide additional clues about investor sentiment and monetary policy expectations. Meanwhile, geopolitical developments continue influencing market behavior. Although optimism emerged following reports of improving relations between the United States and Iran, uncertainty remains elevated. Statements suggesting that tensions could re-emerge if agreements are violated have prevented investors from fully embracing risk. Energy markets remain sensitive to developments in the region, and elevated oil prices continue contributing to inflation concerns. Because inflation remains one of the Federal Reserve's primary challenges, geopolitical events are indirectly shaping monetary policy discussions. Investors recognize that external shocks affecting energy costs can complicate the Fed's efforts to restore price stability, making future policy decisions even more difficult. The Federal Reserve's latest projections have added to market uncertainty. While rates were held steady, policymakers signaled increasing concern about inflation pressures. Several officials now anticipate at least one rate hike before the end of the year. This represents a notable shift from earlier expectations and suggests that inflation remains a significant concern despite previous efforts to control price growth. For crypto investors, this development introduces a challenging scenario. On one hand, economic resilience supports confidence in financial markets. On the other hand, persistent inflation could force policymakers to keep financial conditions tighter for longer, limiting liquidity and reducing enthusiasm for speculative assets. Kevin Warsh himself has made it clear that inflation is a top priority. During his remarks following the policy meeting, he emphasized the importance of delivering price stability for American households. He acknowledged that elevated prices continue to place pressure on consumers and signaled that the Federal Reserve remains committed to addressing inflationary challenges. These comments have attracted significant attention because they suggest the new chair may be willing to maintain a firm stance even if markets would prefer easier policy. Investors are now trying to determine whether Warsh's leadership will ultimately result in a more hawkish Federal Reserve compared to previous expectations. Another fascinating aspect of this transition involves Warsh's views on Federal Reserve communication. He has indicated that he wants to reduce excessive commentary and simplify how the central bank communicates with markets. This could mark a significant departure from recent years, during which investors became accustomed to detailed guidance and extensive public remarks from policymakers. A shift toward more limited communication could increase uncertainty in the short term because markets may have fewer clues regarding future policy intentions. However, supporters argue that a more disciplined communication strategy could reduce confusion and improve the effectiveness of monetary policy over time. Financial markets have already begun adjusting to these evolving expectations. Futures traders have significantly increased the probability of future rate hikes, reflecting growing confidence that inflation concerns will remain at the center of policymaking discussions. Bond yields have moved higher, the dollar has strengthened, and risk assets have experienced increased volatility. These developments illustrate how quickly investor sentiment can shift when central bank expectations change. For Bitcoin and XRP holders, the message is clear. Macro conditions remain one of the most important factors influencing market direction, and understanding Federal Reserve policy is becoming increasingly essential for navigating the crypto landscape. At the same time, not everyone believes tighter policy will necessarily derail crypto markets. Some analysts argue that Bitcoin's growing adoption, expanding institutional participation, and strengthening role as a global digital asset could help offset some macroeconomic pressures. XRP supporters point to ongoing developments within the broader digital payments ecosystem and continued interest in blockchain-based financial infrastructure. These longer-term narratives remain intact despite short-term volatility. As a result, many investors view any market weakness around Fed events as temporary turbulence rather than a fundamental threat to the future of digital assets. The next several hours could prove critical for both traditional markets and cryptocurrencies. If Kevin Warsh delivers a balanced message that reassures investors about inflation while avoiding aggressive tightening signals, markets could stabilize and potentially recover. However, if the new chair adopts a more hawkish tone and emphasizes the possibility of future rate increases, volatility could intensify across stocks, bonds, and digital assets. Traders will be analyzing every sentence, every phrase, and every nuance for clues about what comes next. In many ways, this meeting represents the first real test of Warsh's leadership and the first opportunity for investors to understand how the Federal Reserve may evolve under his direction. As the countdown continues, Bitcoin, XRP, and the broader crypto market remain on high alert. The rate decision itself may already be priced in, but the future path of policy remains uncertain. With inflation concerns still elevated, the dollar showing renewed strength, and investors reassessing expectations for interest rates, the stakes could not be higher. Whether today marks the beginning of a new era of Federal Reserve communication, a shift toward tighter monetary policy, or simply a continuation of existing strategies, one thing is certain: the outcome will be closely watched by every major market participant around the world. Stay tuned to XRP Economic Radar for the latest updates as we continue tracking this historic moment and what it could mean for Bitcoin, XRP, and the future of the crypto market.